Batsana, thanks so much for your time. Just help us understand in Zimbabwe, how have investors and traders been reacting to the panic selling and this big sell-off that we have seen across global markets this week?
I think we've been following developments on the global front. We've seen that, the impact of COVID-19 in July. But it's worth highlighting that within Zimbabwe, I think the issues or the constraints are just too loud in terms of the problems that we see that are country specific. So basically, we're looking at an economy that's already contracting. We're looking at inflation around above 500%. Foreigners on the market have always been exiting. So really, it hasn't really affected, trading activity or changed anything, really, given, of course, the constraints that we continue to see. And most of them are country specific and not directly correlated to what's happening on the global front.
But talking about the economic constraints that Zimbabwe is currently going through, I mean, what's the thinking around if China slows down a lot more than expected, or in fact, if that economy contracts and we do have a global recession, I mean, what does that do to Zimbabwe's prospects of trying to, make its economy a lot better, especially as it does continue to knock on several doors for aid?
Yeah, so definitely we're watching developments and we're seeing some emerging risks. So in the medium term, the sector that we've seen affected really is tourism and hospitality. I think Zimbabwe has been pushing this drive to boost sort of the tourism sector. It contributes 6.2% to GDP, also contributes around 70 million in terms of inflow. So really, when you're looking at the international arrival, we find that most also come from Asia, America, and also Canada. So those are sort of affected areas. But it's also worth highlighting that Zimbabwe benefits in terms of 80% of its arrivals come from within Africa. So if then the COVID-19 spreads into the rest of Africa, that will be quite detrimental, especially for the tourism sector. But what we've also analyzed in terms of commodities, I think the trend that we're seeing is that there's been a shift in investors into half of it, and one of them is gold. So definitely Zimbabwe can benefit on the gold front. And another area where it can benefit is in terms of oil prices that are coming off. So in terms of the budget that we have annually, we pay something around 1.5 billion in fuel imports. So if oil prices continue to be down there, definitely that will be an advantage. But for other commodities, there's obviously a risk. If you're then looking at agricultural commodities, tobacco, cotton price, and things like that, given that it's a commodity-driven nation.
And then, Batsana, I mean, as a fellow African, looking at the number of reported cases on the continent, we're talking Gabon and Ghana. We know Nigeria has a case in Senegal, and here there are a couple in South Africa. What's your thinking around Zimbabwe and the ability of Zimbabwe to be able to, cope should the COVID-19 virus hit your shores? What is government saying about its level of preparedness to deal with it should it really arrive in Harare?
Yeah, so I think the government doesn't have the capacity, just judging even from the amount of money that's there, looking at treasury, given that of course we facing a lot of these fiscal deficits. I think we're also coming in from some shocks in the form of cyclone and also the impact of the drought. So really, that would be a huge blow for a small country like Zimbabwe that's also trying to recover and also that's facing some country-specific constraints. So really, I guess the international engagement efforts will be quite critical. Things such as donor support and things like that would definitely help a country like Zimbabwe. But in terms of the preparedness, definitely, a country like Zimbabwe is not well prepared.
Batana, two last questions for you. I mean, you've often said that in terms of where you would be putting your money, it's a couple of companies on the ZSC that have got quite a big export exposure or are big exporters. And I'm wondering if that still stands right now, given the fact that global demand is expected to slow. I mean, are those export markets still looking healthy by way of demand for the products of these companies?
Okay, so it's also with looking at the underlying commodity inflation. If it's gold, definitely we continue to recommend investors to look into your Badenga holdings, that is an investment in a gold operation. We have companies such as Zim. They'll definitely continue to benefit from gold. But as things evolve and if there's a recession, definitely exporters will be affected. But what we're seeing, given the severe weakness, especially when you then look at what's happened on the monetary front, I think early this week we saw a press conference from the RBZ actually saying that they're going to liberalize the interbank and they will allow banks to actually trade. So the implication is that the interbank market will actually move up from where it is around 18. So we're expecting a significant depreciation of the local currency. So which means that importers really will be the worst, in terms of being affected, and exporters at least they will have a cushion given that they will generate some money.
All right, Batana, I will leave it there. Batana Matsiga, the head of research at Morgan & Co.